Third, any publicly traded U.S. company that stays in China, well, their stocks are going to get lower valuations in the stock market as long as the trade war goes on. If your business depends on China for its sales or its supplies, you're going to pay a price here. And the White House doesn't care if those stocks go down. The White House actually wants to see that. The president accepts that some companies will simply move to Vietnam, although he's wary of transshipments from China. So American companies even need to be careful that they aren't simply buying Chinese goods routed through Vietnam. He'd prefer Indonesia or Malaysia, although ideally he wants these companies, of course, to come back to the United States. But when he orders American companies to leave China, the whole strategy is that the stock market will do his lifting, his heavy lifting, in terms of punishing anyone who doesn't listen. Maybe you think that's too sophisticated for the White House. I think it's intentional, but whether it's part of the plan or not, it's absolutely happening. Finally, and this is a toughie, our industrial economy is absolutely getting hurt because of the tariffs. There's a visible slowdown in manufacturing as measured by rail car loadings, lumber, plastic pricing, auto sales, linerboard, high-end home purchases. So if you have a lot of exposure to the industrials, I think you need to do some swapping. That's right. Sell something and move into something less cyclical. I recommend moving into nice, consistent companies with good balance sheets and high dividends. That means Verizon with a 4.2% yield, but not AT&T with its more precarious nearly 6% yield. AT&T's balance sheet isn't good enough. I want you to review the good REITs, like a Ventas or a Vici. There's also gold. We like Barrick. We like Agnico Eagle. If you just keep your money in an index fund, I don't think there's really that much you can do here. You got to ride things out, expecting more volatility, even though it can leave you bruised, pain, because it's too hard to swap out and then swap back in at just the right moment. We don't play that game with Mad Money. However, you might want to raise your cash position on these strong days to at least 10% of your portfolio. This is going to be a long slog. You need to be prepared for more pain. And you need to be able to buy that pain, even if the pain, well, let's just say, is painful. Bottom line, whether or not China wants to make a deal, from what I can tell, President Trump believes the longer he holds out, the better, which means we haven't seen the last of these brutal sell-offs. So get used to them. And next time, remember, there's almost always a bounce after the worst of the carnage because he wants one.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.